All right, a year-end chat with Clint Wilkins, our mortgage guru and co-host of Mortgage 101, your guide to home ownership, which airs on our radio station, of course, monthly. Clint Wilkins, hello.
Hi, Todd. How are you?
I'm well, and yourself?
I'm doing great. It's December. It's almost the end of the year, and I'm looking forward to 2025. I think it's a positive outcome.
Why do you say that?
I think it's going to be a busy year in 2025. I think the Bank of Canada is going to continue to reduce the key rate, which is going to be positive for anybody who has a mortgage that's obviously variable or anybody who has a home equity line of credit. I think the real question is going to come, from borrowers, what's going to happen with the fixed rates. I think, looking to the U.S. and what's going on with the bond market, I don't think that the fixed rates are going to be going down anytime soon. I think a lot of people are kind of waiting and hoping that that was going to happen, and I don't know if that's going to be the case next year. But I think there's some positive outlook, at least from a variable rate perspective.
Yeah, for sure. So looking back on the year that was, what do you think some of the biggest, from a mortgage-related vantage point, of course, what do you think some of the biggest stories were?
Well, I think number one story is the Bank of Canada. You and I were talking at the beginning of the year on Mortgage 101 that, my estimate was that they were going to reduce the key overnight rate by 100 basis points. Obviously, now that's well exceeded it, with almost 200 basis points reduced here by the end of the year. I think the other big news story is the federal government has, made a lot of changes. It's the first time in, I think, 15 plus years that we've seen mortgage rules, starting to be relaxed. I think bringing back the 30-year amortization for first-time home buyers, getting a high-ratio insured mortgage is huge. I think that's going to enable a lot of borrowers across the country to be able to qualify that weren't able to qualify before. So I think that's very cool. And, some other unique products like coming back with an insured high ratio refinance up to 90% loan to value. That's starting in January, Todd. So some big news stories. And I think at the end of the day, it's around, creating housing. And we have that challenge here in Halifax. There's not enough supply and there's more demand than there is supply. That's not the same story necessarily across the country. There certainly are other areas where there's lots of supply and there's not as much activity. But I think we're going to see a lot of activity here in Halifax. I expect that we're probably going to see the values continue to increase. I expect we're probably going to see at least a 5% increase next year in property values. Mm-hmm. And I think we're going to see a lot more activity. There were a lot of borrowers and buyers that were sitting on the sidelines, I think primarily because of rates and uncertainty from the economy and inflation. But I think we're going to see some more borrowers enter the marketplace in 2025.
Yeah, and for people listening right now who want to enter the market, you saying that the home increases or home price increases are going to go up 5%, that's not good news.
I don't think it's good news. And I think, for the borrowers and the buyers that were looking to get into the market, I think some people are waiting. They're trying to wait out the rates. But the challenge is when the rates come down, and even if we're just talking about variable rates coming down, it will bring more buyers into the market. And when there's more demand and if there's no increase in supply, the prices will go up. I think a lot of people were sitting on the fence, maybe the last 12 to 18 to 24 months, and they're waiting for rates to come down. But the challenge is with lower rates oftentimes means higher purchase prices. So I think that's what the story that we're going to see here in 2025. And, you can always date the rate. That's what we say. The rates change all the time. The challenge is that the purchase price is what the purchase price is, and that's not going to be changing.
Inventory is always a challenge, and this all ties in with it. New home construction, new builds in the Halifax area. Where are we with new home builds?
I still don't think that we're building enough. There certainly is some construction happening. I think kind of the most construction that we're seeing is the apartments. Like you see it out your window here from the studio, Todd. There's towers or cranes in the sky all over downtown Halifax and in downtown Dartmouth. We're bringing a lot of apartments online. And there was a story in all Nova Scotia here a few weeks ago, or maybe a couple months ago, that the demand for apartments now has started to ease a bit. One of the big landlords in Halifax has said that the actual average price for a two-bedroom apartment now is sub $2,500, where that had been continuously increasing just due to the lack of supply. There's hundreds and hundreds of new apartments coming online, and you may not really think, how is that going to impact, real estate buying? How is that going to impact, getting a mortgage in Halifax? apartments are needed as well. And I think that we need to remember that any housing unit is a good unit. And there certainly are there's a whole group of little old ladies and little old men that would have moved into an apartment over the last 5 years and freed up more supply if there were apartment units to be had. So I'm, thinking very positively about, what's going on in the rental market. And you hear some criticisms around, just the pricing, and it's always a luxury and high-end units that are coming online. But I think any unit is a good unit, and it will free up some of that lower value, cost real estate and apartments, and when some of this more expensive stuff does get opened up as well.
Okay, affordability in general. This is a huge story when it comes to housing. Do you have some concerns when it comes to affordability?
I think affordability is a concern at every price point, and it doesn't matter how much you make. Everyone's feeling the squeeze, Todd, from housing, from the cost of fuel to groceries. Like I see it when I go to the superstore. The bills for order of groceries have continued to increase and increase. Everything has gone up, and the challenge is that the incomes have not paced. But from an inflation perspective, things are certainly moving in the right direction. We're seeing inflation get down to that target 2% number. And it is a different story in the U.S., Todd. And I know it's hard to compare apples to apples because our economy here in Canada is very, very different from the U.S. But when we're looking at things like GDP and inflation, our economy really, really is slowing compared to what's going on in the U.S. And that's why I think the Bank of Canada is going to continue to lower the key overnight rate and make that cost of borrowing more attractive for everyone. It's not just homeowners and mortgage holders and people with a home equity line of credit that's impacted by the Bank of Canada. It's businesses, it's the banks, it's how are we going to get more capital into the market. And if we have lower rates, it will stimulate more spending and more borrowing.
Yeah, indeed. So what about a potential change in government or rather when it comes to, I suppose, the politics of all of this? How political do you think, or how much does politics play into the Bank of Canada? Well, not the Bank of Canada, but I guess housing in general. What are your thoughts on politics and housing and mortgages?
I think it's huge, Todd. And we've seen, obviously, different governments make different rule changes. And some of these changes that were announced by this Liberal government in 2024 could very easily be rolled back or could very easily be changed if the government does change. The government of the day, they want to have their own impact. And I can tell you, housing is on the forefront of every government's mind, every political party. And should housing be a political matter? I think it certainly does need to be, and we are in a crisis here in a lot of areas in Canada. And it's not just from a federal government perspective, and I know that's what you're talking about with the potential election, but it takes all levels of government to change what's going on with housing. And we need the federal government involved with the province, and we need the province involved with HRM in terms of really getting these shovels in the ground. And we need to have, obviously a more aggressive housing policy and outlook. And Halifax obviously is not alone, but Halifax really has been really challenged over the last 4 or 5 years from a housing perspective.
What are your thoughts on densification and building up as opposed to sprawl?
We need the density.
Yeah.
I think all along Yonge Street, where the studio is, all along Roby Street, on Wise Road, where our office is in Dartmouth, should be all towers. It's the access to services. We're talking about transportation. Build up in these corridors, I think is going to be very, very healthy. Urban sprawl is expensive, and urban sprawl is challenging. The one thing I will say is Halifax, Nova Scotia, we have a lot of real estate. We can certainly open up big swaths of land. But, not that long ago, we had some huge fires. And, I think that really needs to be planned out properly. When you think about going down the Hammonds Plains Road, no more housing can be sustained there, just from even a transportation perspective, the lack of city water, These are a lot of concerns that we need to think about. We may have a lot of land, but we need to think about the other infrastructure before we start just building homes.
Okay, we'll continue our chat with Clinton Wilkins when we come back. All right, continuing our year-end chat with Clinton Wilkins, our mortgage guru, co-host of Mortgage 101, your guide to home ownership, which airs on this radio station each and every month. And Clinton Wilkins, we talk a lot about education on the show and mortgage education. This has been something that you've held dearly and you've been committed to for a long, long time. Why is education when it comes to mortgages something that you think is so important?
Well, I think it's scary for consumers, Todd, and it's really the unknown. I talk to consumers every single day, and I actually see clients myself. I'm not just, sitting in my ivory tower and talking to you on the radio. I'm in the trenches. And it would really surprise you the lack of knowledge and understanding. It's a very complicated widget here in Canada, mortgage lending, and that's why I think it's so important to seek the advice of an unbiased mortgage professional. The differences between lenders would really surprise you, and I think over the last couple of years, the differences are even more than the similarities. And not all lenders are the same, from a rate perspective. Not all lenders are the same from a policy perspective. And that's why I think it's kind of interesting. When we look at a file, it's like a snowflake. And I know there's a lot of snow in Halifax. It's around income, assets, and credit. And how do we best tell and present the story to the lender to get the best possible solution for a customer? And when we're doing a transaction, it's not a transaction forever, even though you think mortgage, morta, it's a death loan, but it's around the term, and the term is just so important. And people's needs have changed, Todd, especially over the last couple of years. They've changed, and they've really, I think, kind of progressed more. And I think clients were just at one time just so focused on the rate and just getting the transaction done. I think that's what we really heard early days of the pandemic, which, believe it or not, we're going on 5 years, 5 years ago. They were really just wanting to get it done. It was around the rate. But it's really shifted the conversation more and more to the advice piece, just because I think a lot of people are having a hard time. They're having a hard time from an economic standpoint, around inflation, and kind of the needs and the conversations have shifted.
Right. So for those people having a hard time, what's some good advice that you can give people? What are some things that they could do to help deal with the hard time? Because you can always be and should always be proactive.
Definitely be proactive, and I think ask for help and ask the questions. Don't just stick your head in the sand and ostrich, like we like to say from time to time. Yeah. So ask for help. And the nice thing is, if people had purchased a home prior to 2020, typically they have a lot of equity in the house, Todd. So, we're looking at a lot of refinances, and the refinance may be to pull out some equity. So when you refinance, you can go up to 80% of the market value of the house. So that's one thing that we certainly are seeing a lot. But the other thing that we're seeing, is this renewal cliff that we've really been talking about. I don't think it's quite as bad as the media makes it out to be, but certainly people need to be proactive. I can definitely tell you that there's a lot of people that are coming up for renewal. And even if we're not pulling equity out of the home, Todd, we are playing sometimes with the amortization. People are choosing to go back up to 25 or 30 years in terms of an amortization perspective, just due to the current rate environment. They want to be able to bring down their monthly output. Not so much even the borrowing cost. I don't know if that's what people are concerned about, but they're really most concerned right now around the payment. And I think that's what people are buying.
All right, stretching out your amortization, your payments, although it can ease the short-term pain, and in some cases, absolutely necessary and integral to do so. But I would caution perhaps, or I would ask you perhaps to weigh in on people not doing that unless it's absolutely necessary. What are your thoughts on that?
Necessary, or is it needed right now? And this is the conversations that we have. There's certainly a lot of times I talk to people, I'm like, okay, from a 20-year to a 25-year, not that much difference. Or from 25 years to 30 years, not that much difference. But I do see people that are coming up and they have, for example, like 10 years left in their amortization. And at the current rate environment, they're like, I just can't handle more of a payment.
Yeah.
And I think maybe they went very aggressive a few years ago.
Yeah.
And I think when they're looking at extending the amortization, it's not a forever plan. They're not planning on extending it to 25 or 30 years and then just paying a mortgage over the next 30 years. They're doing it for the next 3 to 5 years with hopes that in a couple of years the rates will be less.
Yeah, for sure.
And then I think shorten the amortization from there. And I think go back to, their initial plan. And that's why I think it's so important to ask the question, what is the goal here?
Mm-hmm.
Is the goal to get this paid off as quickly as possible? Or is the goal really around payment? Or is it somewhere in between? And I think people's objectives and goals have changed. And I think they've had to change. And, I think it's just about asking those questions. And when I think a mortgage is coming up for renewal, it's such a big piece of people's lives. It's important to look at all of their finances when that happens.
Okay, so you say their objectives have changed. Why do you say that?
Well, I think it's around cash flow.
Yeah.
And, we talk about inflation. The cost of living overall is high.
Yeah.
And incomes have not paced. And that's why I think it's a temporary reset, I think, for some folks. And, it's existing clients, it's new clients, and we're talking to them. The biggest concern really is around payment. I've used this term. Canadians were drunk on cheap money. They were. And, I think maybe some people went a little bit overzealous. We're talking about pre-stress test, or when we were stress testing, we're stress testing at a rate of around where the rates are right now. So we know people can qualify. It's not so much a qualification issue. I think it's more of a lifestyle issue and a payment issue. And I think that's what we've really been seeing, at least in 2024.
Indeed. And again, like you said, don't ostrich, and that this all ties into have that conversation with your lender, with your mortgage broker or whomever. But you have to deal with it. You have to be proactive, and it starts with knowing the details. And although it's difficult at times to do that, but the alternative is disaster, right?
The alternative is not good. And I really do encourage the listeners to start the conversations early. There's so many times, and even December, I was talking to people a couple weeks ago that had mortgages renewing this month.
Yeah.
That's really too late. We need to be having the conversations like 3-4 months plus before the renewal. And you may think, hey, I'm just going to wait. I want to see if the rates are going down. And I always tell consumers, and this is where there's some misconception, I like getting something approved, even if it's 3-4 months away. And then if the rates go down with that lender that it's approved with, we can always float the rate down. The approval doesn't necessarily mean that, okay, we're tied and this is the way it has to be. So I think do it early and have something in place that's going to work for you. And, I think we've really seen that. We've actually seen some rates go up, Todd, to be honest. And although we see the Bank of Canada continuing to reduce the Q overnight rate, some of the fixed rates really have edged up over the last several weeks and months.
All right. Look forward to 2025 and lots of great conversations with you, including early January. We're all set for Mortgage 101 again. So remind everybody, I guess, Merry Dettmas is what we kick the year off with, right?
Yes, we're going to be talking about Merry Dettmas, which obviously is a very important time of the year. Coming out of these holidays, Todd, some people really have overdone it, or we were continuing the conversation around financial health. And the conversation is really going to be about refinance. What do the mechanics of a refinance look like? Who is that right for? And we're going to bring on an exciting guest as well. So we'll have that tied up, and I look forward to getting it on the air on the second week of January.
Okay, Clinton, we'll see you in a couple of weeks, or we'll see you next week, I suppose. And thank you so much. Happy New Year, my friend.
Happy New Year, Todd. Chat soon.
Okay, take care. Clinton Wilkins, our mortgage guru.